We're going to go ahead and get started. We want to welcome each of you that have joined us for our first time homebuyers webinar. This is University Credit Union, and my name is Jennifer Young. I'm the sales manager over the mortgage team, and we are being joined today from with Joseph Gordon from the Select Group Realty, the Gordon Real Estate team. He's our guest agent, and he'll be covering a lot of the information when it comes to the purchase contract and working through that process. Just a few housekeeping items. Wanted to let you know that if you do have questions, we'd really encourage you to type those questions in. We'll see those as they come in through the presentation, and we'll try and address those either in the presentation or along the way. We'll stop and answer those and address those questions. If there is information that is not covered in this presentation that you would like to hear more of, at the end of the presentation we'll post information of how you can contact any of our mortgage consultants. We'll also have their contact information, phone numbers, and the branches that they're at. Just an update on that, as well as the branches. We have 7 mortgage consultants here at University Credit Union. They cover each of the branches that we have. If they are not located directly in that branch, they are happy to meet you at that branch. So just reach out to us and let us know what's most convenient for you, and we'll meet you there. To get started in our first time homebuyers webinar, we're going to be covering a lot of the information that is required to purchase your first home. Many of you have never purchased, some of you have, it might have been years, but we're going to cover information that is pertinent to that first-time purchase. The loan programs that are available with the credit union include this list of conventional, FHA, VA loans. We do fixed-rate loans and adjustable-rate loans, as well as short-term construction and jumbo. For this presentation, most of those we're going to address are conventional loans, but we will address the differences between conventional and FHA as well. We want you to be prepared for the purchase of your home and what you can expect through this process. Through the process, you'll be asked to complete an application. That application includes a lot of your personal information. It includes your name, your information, your address, social. It also includes an employment history, as well as any assets and liabilities that you may have. Along with that application, we're going to also ask you to provide additional information. Pay stubs, W-2s, your tax returns. We're also going to ask you where you keep where the down payment is located. So if it's in a savings account, if it's in a checking account, if it's going to be coming from a gift, all of those things count, and we're going to need documentation on that. So we're going to be asking for that documentation. In addition, after we get that information, we're going to go through a process and do a pre-approval. That information is evaluated, and then we issue a form that's a pre-approval letter that tells you exactly what you qualify for and how much that would include as far as a purchase price and a loan amount, the interest rate, the terms of the loan. Gives you an idea of what you're actually qualified for. And then the hard work begins. It's you finding that home. Finding a home can be really challenging, especially in the market today, and it's really important to have a really good agent on your side that helps you through that process. And so that's the fun part for you, is you get to go through a lot of homes and find that perfect home. Once you find that home and you're under contract, then we'll issue what's called a formal approval. That formal approval just tells us that if there's anything additional that the underwriter would like to see based on the information that they've evaluated. So they would evaluate after your formal contract. They'll get an appraisal on the property, we'll get title information, and they'll evaluate all of that information. And at that point, they would say, this is what the formal approval is, this is what we have to come up with for closing. Once we give all that information, they sign off on all of that, then we go to closing, and that's when you sign your final note and deed and get your keys to your home. There are a lot of things that can affect your payment on your mortgage. Many of those things include the down payment, if there are condominium or HOA fees. HOA stands for Homeowners Association. Many condos or townhomes that have an association that take care of the grounds, and if there's improvements in there, if there's tennis courts or swimming pools, HOA fees cover those things. PMI insurance is private mortgage insurance. That is an insurance that is placed on a loan if there is less than 20% down payment. Then PMI insurance actually helps the lender to be able to lend you more money, essentially is what that is. And that's a variable that would affect your payment. Property taxes, homeowners insurance, those two things are big variables as well. Depending on where you purchase, your property taxes can vary up to as much as 1 or 1.25%. Some are a little bit lower in areas, but when you look at properties, it's really important to have your agent let you know what are the property taxes so that you can know what that's going to affect on your payment. And then your homeowner's insurance is the insurance coverage on the home itself. It's actually, you get to choose this insurance. You tell us who you want to go with, and then we'll just go ahead and include that in your monthly payment. But it's the coverage on the property itself. And then credit is probably the single biggest variable that can affect your credit or affect your payment. Your credit score is how your interest rate is determined. It's how the PMI rates are determined. And so it really can impact your overall payment of your mortgage. And so it's really important to know your credit, know what the score is, and if there are some dings on your credit or if there are some things that have lowered your credit score, get with us, reach out to us, let us work with you and help you get that FICO score raised up. Now, I talked about how the impact of PMI insurance, and I just wanted to show you really quickly the impact of credit on the private mortgage insurance. If you look in the category, the 3% down column, you'll see that if you have a 740 FICO score on a purchase price of $300,000, and I know that's a little bit high, but for a purchase price of $300,000, your FICO score at 740 would give you a private mortgage insurance of $160 a month. Now you can see if you look down at 640 on a FICO score, that amount goes up to 476. You can see that there is a really big savings, a significant savings between a 740 FICO score and a 640 FICO score. And that amount, that extra 300 and some odd dollars in between those two would give you the ability to purchase quite a bit more home for that difference in that private mortgage insurance. Now, if you look at the 5% down column, you can see this is where the down payment difference, when we reference that the down payment would have an impact on your payment. 5% down versus 3% down with a 740 FICO, you're looking at 160 versus 105. And likewise on the 640 FICO score, you're looking at 476 versus 319. So you can see that additional 2% down payment to get to a full 5% down payment can really save you a lot of money on a monthly basis for the overall payment. Just one thing that we wanted to point out with you, private mortgage insurance companies have given the credit union members a significant discount over if you went with another institution or with a broker. If you came to the credit union and did a purchase price based on $265 with a 740 FICO, your monthly PMI insurance would be $92. If you went with another institution, you'd be paying $125 a month. The difference in that savings translates really into your ability to buy about another $14,000, $15,000 more in-house. Instead of paying it in mortgage insurance, you would pay a little bit more in your payment for a higher priced house. So when we work with you, we want to make sure that you're prepared for all of the other expenses that you're going to face as a homeowner. We want to make sure that you have a really positive experience being a homeowner. And so we're going to discuss with you a lot of different things at your initial application and your initial consult. We're going to discuss with you closing costs. Those are the costs that the lender charges for the transaction. So, and there are many other people involved in the transaction. So the lender's cost is the origination fee. You also have title fees. You also have an appraisal, credit report, tax service. There are many other parties that are involved in the transaction, and that's what we refer to as the closing costs, or those parties' fees to get the transaction accomplished. We also want you to be prepared for things like appliances and furniture, repairs on the property, window coverings, those things that you're going to face as a homeowner that you may not have to worry about as a renter. And the impact of buying a purchasing a condominium or a single family home, you know, condominium, as I referenced earlier, has an HOA fee, or a townhome might have an HOA fee, and a single family residence typically does not. So there are things that are covered in that HOA and other things that would not be included. Just some of the simple little things that you might not think about, the yard tools. We just want to make sure that your overall purchase experience is a positive one. Many of the times we get questions on, do we offer construction loans? So yes, we do. The answer is yes, we would love to work with you, and we will go up to 95% of the purchase price or the cost to build. If you're looking at purchase, if you can't find that home that is perfect for you and you decide that you would like to build a home, this is a great way to accomplish that. Just a note, we do get asked from time to time where somebody will come in and say, we're buying a home from Destination Homes or from Ivory Homes or some of the big builders, and they're saying we would like to build a home with them. A lot of times with those big builders, you don't have to worry about the construction loan itself. They actually provide the construction. They go through that process themselves, and then you're just required to take out the long-term mortgage at the end when the home is completed. So there is a difference between that type of building a home and the type that we're looking at here. This is a construction loan. We're talking about a custom home that you would build on a separate lot, that you would be able to customize the entire home. So if there's information on this that you need additional information, you're welcome to reach out to us. We'd love to discuss the different options. We do offer a single closing or a two-time closing. Those get a little bit confusing and a lot of information to cover here, but we just wanted to briefly let you know that we do offer those loans. So why now? Why now is a good question. We do feel like it's a great time. It's always a great time to invest in real estate. Interest rates are really good. You hear all the time on the radio that interest rates are going up. Rates are still really good, between 3.75% to 4% overall on the interest rates. Those are great rates. Real estate's always been a really good investment. The tax benefits, the advantages, but also University Credit Union actually offers some great programs for the first-time homebuyers. 3% down for first-time homebuyers. And we're also offering a deal to you being on this webinar. We're going to be sending you out at the end of the webinar. We'll send you an email that includes a $500 coupon that will put towards either closing costs or pay for the cost of your appraisal, one or the other. We really want to work with you, and we feel like it's a really great time. The market is a good time to get into it. It's a good investment. The tax benefits are wonderful. And working with the credit union, you'll have a great experience. One question that we also get asked from time to time is, do we sell our mortgage loans? Do we sell them to an outside investor? And the answer is no. We hold those loans, so we will service those loans for the life of the loan. So when you do a loan with us, you will actually continue to make your mortgage loan with us throughout the duration of the loan. At this point, I'm going to wait for just a minute and see if there's any additional questions that you might have before I turn the time over to Joseph to answer any questions on the purchase contract. So if you have any questions, feel free to go ahead and type those in. One of the questions, I'm just going to address, one of the questions that we had earlier was, when would it be beneficial to do FHA versus conventional? That's a really good question. FHA typically would be when you have credit scores that fall below that 620 mark. So if you have a credit score somewhere in the range of 600 to 620, it really might be more beneficial for you to go FHA versus conventional, and we handle both of those. But one of the things that's nice about working with a credit union is you'll be able to sit down with a consultant, and they'll go over both scenarios with you and give you an idea of which scenario. They'll help you look at the pros and cons of which one, but in the end, you really are the one that's going to know what's best for you. We can give you lots of suggestions. That's our job, is to give you lots of different options and lots of suggestions, but in the end, yours is to go ahead and choose. Another question is, we're looking to move to Idaho. Do you service mortgages to other states? We do not, dang it. That's a really hard one to say no to, but we only finance within the borders of Utah. So anywhere in the state of Utah, we're happy to help you. You don't have to live here in Utah to get a loan, but the property has to be located within the state. So another question is, how are loans for multifamily real estate, so that would be a duplex, a fourplex, different from loans for single family homes? It's a really good question. The biggest difference between those is interest rate and down payment. That's really where you're going to notice the biggest difference. It requires a little bit bigger down payment. If you do a duplex, it's a little bit more, and a fourplex is a little bit more. And likewise on the interest rate. The interest rate for a duplex is slightly better than what it is for a fourplex. And it also matters whether or not it's going to be owner occupied. So you can technically purchase a duplex, live in one side of it, and finance it as a primary residence, even though the other part of it is going to be rented out. And the same applies for a fourplex as well. If you're going to be living in one part of it and renting out the other 3 units, we actually can use the income from those and help you in the qualifying process. That's a really good question, and honestly, I'm not going to address many more of the answers to that, but that's a really good one to follow up with us on. I'd love to take a minute and discuss more with you if you do have other questions on that, but thank you. That's a great question. Okay, I'm going to go ahead and turn the time over to Joseph Gordon. Again, he's our guest agent, and he's going to go through the purchase contract and the transaction on that end of it.
Okay, so about 90% of homes that are for sale are found online by buyers. And so when you start your home search, it's really important to choose a website that has what's called a live feed from the actual Utah MLS, which is the multiple listing service. Second thing is, you want to make sure that the website's updated in real time, so that if literally a home that's on there sells today, or goes under contract today or has a price adjustment, it immediately reflects on the website. You want to make sure that the website has an auto send feature. So if there's any new listings that pop up that fit your criteria, they're going to get automatically emailed over to you. And again, that automated updating is so important. If a home goes under contract, if it's sold, you want to know that right away. And then lastly, you want to be able to go in and plug in your search criteria for the kind of home you're looking for, just so that you'll only have homes emailed to you that fit that. Now, something that's really, really awesome is that the University Credit Union actually is offering private MLS access. And again, that stands for the Multiple Listing Service. It's every home for sale in the state of Utah. And this tool actually is updated in real time. You can plug in your search criteria. I mean, it has all of those features available. When you click on that button, and can we go back a slide real quick? I'm just going to show. So when you click on that Home Center drop down on the main screen, you'll see a button that says Search for Homes. You'll just click on that, and then that's going to take you over to the main page. You can go in here and you can plug in the price point that you'd like, what style of home, minimum bedrooms, bathrooms, the cities you'd like to be in, and then once you save your criteria, it'll start pulling up those homes that just fit what you're looking for. Now, if you see a home that you really like, you can click. There's actually a showing button next to the listings, and if you click that and request a showing, either myself or one of the agents on my team will actually get back to you within the hour. We can get that showing set up for you. Now, when you find that home that you're absolutely in love with, you're ready to make the offer, the first thing you're going to do is put down what's called earnest money. Now, your earnest money basically shows the seller that you're serious about the house, and it's between 1/2 and 1% of the purchase price of the home. Now, this money will actually go towards your down payment when you close on the house. So don't worry, about losing it, because it'll actually stay in your real estate broker's account until you close. Now, the other thing to keep in mind is that earnest money is protected by 4 key deadlines on the offer. We're gonna get into those in just a minute, but all of those are there to protect your earnest money as the buyer. And again, that money gets deposited with your real estate brokerage. So, for example, if you're buying a $200,000 house, you're looking at $1,000 to $2,000 in earnest money. Now, when you go to make that offer, you're going to want to sit down with your realtor and have them pull some recent comparable sales that are similar to the house you're buying. Make sure that your realtor is familiar with that neighborhood so that they can look at the market trends and see how fast things are selling in that area. And then really importantly, make sure your realtor calls the other agent and tells them and finds out if there's any competing offers so that you know how strong you need to come in on that offer. Secondly, you want to make sure that you check back with your loan officer and that you're clear on how much your down payment will be, which loan program you're going with. Now, fortunately, all of the loan officers at the University Credit Union are complete rock stars, and they'll be really clear with you on how much your down payment will be, what your monthly payment will be, and that way you won't have any surprises. And then, of course, your monthly payment will encompass your principal and interest, your property taxes on the home, your homeowner's insurance, and then any HOA fees that you have. And then lastly, you want to make sure that you're clear again on how much your closing costs are going to be with the credit union so that your realtor can go back and try to negotiate to get the seller to pay those for you, which is actually fairly common. Now, when you make the offer on the home, you can actually ask for personal items in the home as well. Now, most people won't give you their grandma's, china cabinet, but if there's a really nice set of appliances you like, or a hot tub, or even a TV, you can definitely include those in the offer and see if they're willing to part with those. Another thing that's important to ask for or to set up in the purchase is called a home warranty. Now, most realtors have a home warranty that the company that they really like, so they'll refer you to one. Home warranties are usually between $340 and $450, and they're really important because they cover all the major systems in the house for 1 year. So your electrical, your plumbing, your appliances. And one company that I like to use is called Landmark Home Warranty. For example, if your AC goes out, you just pay a $60 deductible, and the rest for the repair or even the replacement of the AC is covered. So really, really awesome to have that. And again, about 90% of sellers will pay for this, so be sure and ask your realtor to negotiate on that for you. And then lastly, once you've owned the home for a year, you can always renew that home warranty every year for $300 or $400. So that way you're covered if anything major goes out. Now, when you make that offer, I'm just going to briefly run through these 4 deadlines, and then we'll go into them in more detail on the other slides. When you make that offer, there's 4 key deadlines that protect you as the buyer and your earnest money. The first is the seller disclosure deadline. This is between 3 and 5 days out from when you go under contract. There's the due diligence deadline, which is between 10 and 14 days out from when you go under contract. And again, by saying under contract, I mean that you've made an offer and that the seller's accepted it. That's what that means again. The third deadline is that financing and appraisal deadline. That's usually 21 to 30 days out. And your last deadline is your settlement deadline, and this is 30 to 45 days out. So going into a little more detail, that first deadline is your seller disclosure deadline. This is, again, usually 3 to 5 days out from once you've had your offer accepted. And the seller disclosures are a 6-page document, and it actually asks the seller about 25 questions about the house. So, I mean, everything you can think of. Have you had, fire damage? Have you had water damage, mold? It even asks if they've had, if they've cooked meth in the house. And what this does is this document protects you in writing. So that way, if they're not honest with you and there is something they've had an issue with and they don't disclose it, you can go back later and take legal action and have them take care of it for you. So that's really important. Now, it's really important to review this with your realtor because there is a lot of legal language in there, and you want to make sure that your realtor explains that to you so that you're clear on what they're disclosing. And again, this is your first opportunity to cancel. So if there's something on there that's a big red flag and you're thinking, they've had termites for a few years, we don't want to deal with that, we don't want to renegotiate, you can cancel and keep your earnest money. But if that doesn't happen, you'd move on to your second deadline, which is your due diligence deadline. And again, this is 10 to 14 days out from going under contract. This is when you would have an inspection done. It'll cost you between $300 and $500 depending on how big the house is. And you can have any test that you want done. So you could have a meth test, radon, mold, anything that you want to have tested. Now, really, really good inspectors, and all realtors have an inspector that they like to work with, but really good ones will do a basic inspection, and if they see indicators of other things like, there's probably some mold in this basement, or might want to get a meth test, this is because of the area that we're in, then they'll usually recommend that. And at that point, if there's any repairs that you don't want to have to handle, you want to ask the seller to pay for or to do, you would ask for those repairs at that point. Now the seller is going to either come back and they're going to agree to everything, or they're going to say no, or they're going to come back and say, well, we'll do some of these, but we won't do all of them. And that's kind of a renegotiation point. Now, occasionally a seller will come back and say, well, we won't do the repairs, but we'll drop $5,000 off the price. And so that could happen as well. But it's important to keep in mind that even if there aren't any major repairs needed, you may just have a change of heart. You may think about it with your significant other and go, we just don't feel this house anymore and want to cancel. And you can absolutely do that before this due diligence deadline. Your third deadline is that financing and appraisal deadline. Now this is usually 21 to 30 days out from going under contract. Now this is your opportunity to make sure that your loan is completely done by the credit union, that your appraisal's been ordered by your loan officer, and that it's come back, and that you know that it's worth what you're buying it for or higher. Now if the appraisal comes in lower, you can renegotiate with the seller and work on having them drop the price. If it comes in higher, you can high-five your significant other and say, we have equity, awesome. Now keep in mind that this is your last opportunity to cancel before the earnest money goes hard, meaning that if you pass this deadline and you're a few days out from closing, and you just decide to cancel, then you would have to forfeit your earnest money to the seller. So that's really important to keep in mind. And just some really important tips for avoiding any kind of extensions on your contract. Make sure that when your loan officer from the credit union is asking you for pay stubs and W-2s and things, make sure that you're really prompt to get those turned in. Your loan officer will work really closely with your realtor. I know myself and my team, we work very closely with the credit union loan officers, and good communication is really key. So just make sure that you're prompt with what they ask for. Now that last deadline is that settlement deadline. This is usually 30 to 45 days out. It's usually a month to month and a half from going under contract. Now 1 to 2 days from signing, you're going to do your final walkthrough. This is where you'll go with your realtor, make sure that the house is in the same condition it was when you first made the offer. Occasionally sellers will forget that they said they'll leave their fridge, or occasionally they'll break a window, and you want to make sure that everything stays that they agreed to and that there's no damage done. Now, assuming that goes okay, you're going to sign your closing papers at the title company. And the title company is just basically a neutral third party that kind of handles everything. And usually it takes about 45 minutes to an hour. You want to bring 2 forms of ID with you. A driver's license or a debit card works fine. Then you'll also bring in your down payment. Now, if it's less than $10,000, I believe is the cap, you can bring in a cashier's check. If it's more than that, then you'll just need to wire that money from your account. And then once you sign, usually 24 hours after that is when your loan would fund and record you on title as the official owner. And at this point, you can celebrate and high-five and hug and kiss and everything else because you own a home. Congrats.
Okay. The last page is to just show you how you can contact us. This is a list of our mortgage consultants. The 801-481-8840 is a direct line. It rings at every one of our desks. And you'll have an opportunity to meet with them and go through the questions. We're going to go ahead and open it up now. If you do have additional questions, feel free to type those in, and we'll answer some of those questions. Give you just a few minutes to type those in. And I'm going to sneak an answer in while you're thinking about your questions, or if you have any questions, I'm going to let you know. Why the University Credit Union? Well, we're awesome. But mostly, we do service our own loans, and that's a big plus in the industry in mortgages. We also have incredibly low fees. Your origination fee and those miscellaneous other fees that many lenders refer to as garbage fees are very low. As an industry standard, they're significantly lower than others. And so not only are you going to get really great service that's personalized service for you, we're in this relationship with you on an ongoing basis. We're not just going to take care of just your mortgage and then say goodbye to you. We're going to go ahead and have an ongoing relationship. So we look forward to working with you for the 15 or 30 years down the line that you're going to have this mortgage. As well as great rates and low fees. It's a great organization to work with. One of the questions that we have is, do we know of any programs for teachers? You know what, that's a really great question as well. There are a lot of opportunities for teachers, especially with the first-time homebuyers. They're typically referred to as special programs for just teachers, but really they're just first-time homebuyers programs. So the 3% down program for first-time homebuyers includes those teachers. I know that there are some organizations that offer some kind of grants or assistance with the down payments. You can apply for those separate outside of the credit union, and we will work with those down payment assistance programs, but we're not associated with any specific program here with the credit union. But we do recognize those if you do have an organization that wants to participate with a grant or an assistance with that down payment. Yes, we will work with those. It's a really good question. One of the other questions that we had earlier was how is the credit score determined? What do we use for a credit score? When we do an application and we pull your credit report, we pull what's called a tri-merge report. And on that report, it gives us 3 credit scores for each person that's involved on the application. So if you have 2 people, we're going to have 6 scores. And we use the middle low score of each of those numbers. So if we have 6, we're going to use the middle one from one person, the middle from the other, and pick whichever is the lowest of those 2 middle scores. And that's how we determine the credit score that's used for pricing. You know what? That's a really good question. Joseph just asked, how long does an application take? An application would take typically about 30 days from when you make your application, and we're assuming at that point that you're also going under contract. It typically takes about 30 days to finish up your mortgage transaction, to go from the start of application until you sign your closing documents and fund. Yes, that's a good point. Joseph pointed out that once you do an application and we pull credit, your pre-approval letter is good for, we actually will keep that good for 90 days. And so you can go ahead and get pre-approved and start the process, and if it takes you up to 90 days, it's good for that 90 days. Another question, what are your requirements for self-employed people? Good question. Self-employed income is averaged for 2 years. So we are required to take a 2-year history of your earnings, and that would be 2 years worth of tax returns filed. And so if you have not filed for a year, say that for some reason you haven't filed for 2016 yet, then we would go off of 14 and 15, which kind of sounds funny that we would go back that far, but we require 2 years of filed returns. That same requirement applies to people that have commissioned or bonus income. So it's the same type of income as if you were commissioned. If you have more than 25% of your income as commission or bonus income, we would require the same thing. We would require a 2-year average of your earning history. It's a really good question. Okay, does the self-employment have to be in Salt Lake, or can it be from another state? You know what? That's a really good question. If your income is going to be drastically changed, so if you were, let me just give you an example. If you were working in Texas and you were selling insurance in Texas, and now you're going to be in Utah and you're selling insurance in Utah, and your income is going to be significantly impacted from that change, we are going to look at that and we're going to require a 2-year history. If we can show that your income from where you moved is not going to be impacted from your moving, then we can go ahead. And there are a lot of people like financial consultants, or, I used an insurance agent. That's a horrible one because they're ones that typically would keep certain income. So those are types that we would just have to show that the move to a different state would not impact your overall income. Those that are something like a dentist that is going to start over with a new clientele, we would need to see a 2-year history on those. Hope that answers that question. So there is another one, timeline question. So if you are not looking to buy a house within 90 days, you shouldn't start the application process. When would you suggest to start the process? That's a really good question. Here's my suggestion on that. The most important thing for you to do is to talk with a mortgage consultant and make sure that everything is in line so that when you do decide whether it's 90 days or 120 days or even if it's a year down the line, so that you know that everything is in line. We don't have to pull credit, but what we will do is we'll go through and help you know what you need to watch for. Look at your credit. We'll show you how you can pull your own credit report and get your own FICO scores. We'll go through and evaluate your income. We'll make sure and evaluate your debts to show you what you would qualify for so that when that time comes, you're ready to jump on it. If sometime it never fails, you're all ready or you're not ready, and all of a sudden you see the house of your dreams and you're going, dang it, we're not quite ready. And that's why we suggest that you meet with a consultant as soon as you can so that you can go ahead and be ready when you do find a home that you really are interested in and serious about. So my suggestion is the sooner the better. It's a really good question too. Okay, so we're going to go ahead and wrap it up. I just wanted to say thanks again for choosing to join us today. We look forward to helping you through the process, and we just want to remind you, tell us how we can help you. Give us a call, reach out to us, and let us help you through the process. We really enjoy what we do, and we really love our members, and we look forward to helping you purchase a home. Thanks so much again, and have a great day.